Adam Harris, Chief Market Analyst. And reporting to you from Herne Bay in the UK, just outside London. So first of all, I want to have a look at what's going on in the markets this week. I want to be aware of any high impact news that could potentially disrupt any of the trends, something to be aware of. So really looking at it, I'm going to focus first of all on the dollar news. We've got non-farm employment change. Don't forget, it's June. So the first week of June shows NFPs. So don't forget Friday, which will be the big one, non-farm employment and jobs numbers coming out of the US. That'll be heavily volatile, but possibly also on the Thursday, unemployment, or even on the Wednesday with ADP figures coming out. So all of those things will create above average volatility, so just be aware of that. In terms of the economy in the US, it's in the most amazing condition actually that it's been in 70 years, and it's the best out of all the global economies, so it's doing just fine. I'm not worried about any of the actual outcome. I'm only concerned about how it can potentially impact nice sustainable trends. Definitely, I would consider something here. We've got the European parliamentary elections next weekend. So that means that there could be gaps on the Monday when the markets reopen. So please consider for your risk management plan any euro positions, any euro pairs or euro positions where there might be some surprises in terms of the parliamentary elections. I'm optimistic. I think pro-democratic parties are going to be leading and winning, but there could be some shock surprises or something. So just something to think about. The most dangerous gapping positions in currencies tend to be elections. So just something to please think about with that. Okay, now let's go back. Let's go to the charts and have a look at a couple of things. First of all, I want to start off with the global indices. So we're here on the weekly time frame. We're looking at the Dow. It has double topped. There is bearish divergence. So usually in situations such as this, we would see the market at least come down to the previous lows, if not potentially move a little bit further. It's unusual, although we are in a bull market, it's unusual for them to do this. I think the most likely explanation is that we're closer to November with the US elections, which is the most significant election in our lifetime at this point in time. It's a really big deal. And it's possible that the markets are going to start to go into a little bit of sideways consolidation ahead of that, because I wasn't really expecting this to happen. Alternatively, should we produce a higher low, should the markets continue to come back up and test the level, we could actually be leading towards a breakout. So it's really important as to how this unfolds. I just want to draw your attention to that. Let's look at the S&P 500. That's also produced bearish divergence. So usually in situations like this, what's going to happen next is that the market is going to head a little bit lower. So just be prepared for that this week, that there is a very fair possibility that the markets could head lower this week and therefore add to that volatility. Even here with the NASDAQ, the NASDAQ has produced again a bit of bearish divergence, and so we could see that happen. So just this week, I'm going to be a little bit more cautious on those. Yes, I do still think we're in a bull market. We are in a bull market. But this could just simply be a consolidation on the weekly time frame. It doesn't really change the status of the bull market at this time. So next up, let's have a look at the UK. So let's head away from the US. The FTSE itself, very nice little bullish finish. So this is a nice retracement. If we measure it, if you use Fibonacci, we measure from the lows to the highs, we get a 382 and a 50 fib retracement, which is very nice. If we go and measure it from the previous ones down here, we still get 23.6. So we get a couple of these, even from these lows here, we get a 23.6, meaning that it's a very normal, natural, healthy retracement. So what I'll be looking for here is to see if we break the high of last week in this coming week. That would be a sign of bullishness. When we look at the DAX, we get a very similar structure to the US markets, but a slight bearish divergence. But again, if we get a bullish candle this coming week, then that trend is probably still intact and we get a potential for a higher low. So there is stuff to pay attention to this week. Over the last few weeks, I would have not have been commenting on anything. I would have just said, you know what, stay the course, everything looks nice and bullish. Whereas now I'm kind of like, let's just see how the week plays out. The Euro 50 as well, double topping there. I want to keep an eye on that. Now let's go to Australia. So the ASX has done a slightly lower high. So we're kind of in an area where the trend is not looking as bullish, but it doesn't mean, let me stress this, it doesn't mean there's going to be a change to a bear market. It doesn't mean that. It's way too soon to tell. What it means is right now, the bull market is pausing for a bit, and that's all it means at this time. Okay, let's look at Nikkei. Nikkei's had a nice correction. That still looks pretty good at this time. That's fine. HK is interesting to me. These are HK and China's 50 as well. These have, after a very long period of time, have finally started to break out of their long-term bearish downtrends and are therefore in the early stages of a new bull market. So what I'm going to be looking for this week is a nice bullish setup this coming week where it finds support on the 50-period moving average and then potentially turns around. So it'll be in the next 1 or 2 candles. That's where I'm looking for that to be the case. China as well, I'm looking for this in the next 1 or 2 or 3 candles to turn around, nice bullish candle, and potentially set the stage for a new bull market on that side. So in other words, HK and China's ones are lagging indices and therefore are just kind of joining the race now, so to speak. Okay, so then let's have a quick look at gold. Gold is double topped as well. So interesting. I'm going somewhere with this. Interesting that we've got both of these have sort of double topped. This is a bearish engulfing candle, just meaning that that is a very strong bearish signal. So again, we could be going into a bit of a ranging type of situation, which either means that we have something that potentially goes sideways like this, or if it's going to maintain its bullishness, we're going to see something that tends to go something like this and starts to have high lows leading to a breakout to the upside. Silver, quickly, so we can compare that. Silver's just a bit overextended, and let's see if it's in a significant area in terms of price. We'll switch it to the monthly and zoom in a bit just to see if any of those levels are significant. Not too worried about anything at this point. I would say that would be a level of support. And if we, excuse me, if we look at these highs over here, then go back to the weekly and have a look. I think we're just more likely to get a bit of a retracement into these 2 areas here. So it's again, I want to draw attention to the fact that all the global indices have kind of hit a little bit of a dead end for now, and we've got the same with gold and silver. Let's have a look at crude oils. So crude oil, what's good about this? So look, from a trader's perspective, there isn't really anything great about this. From an investor's perspective, there's nothing good about this. But from a real world, everyday person's perspective, this is a good thing. It means that oil prices are relatively stable, not necessarily increasing out of control, even though the war with Russia is ongoing. And it is escalating. The real fact is that it seems very quickly on that is that it seems as long as Ukraine is armed, they appear to be able to control Russia and actually beat Russia. Russia now through, I forget the exact word, but through their kind of language, are threatening, war with everyone else. And actually, they really are not in a position to do that. They really aren't in a position to do that. If anyone's concerned about a nuclear war, there's no way that while Putin is hoping that Trump will potentially win the presidency, there's no way he's going to use nuclear stuff prior to that, because that would change the game. So he certainly isn't going to touch anything until he knows for sure whether Trump is in, because if Trump gets in, then he's going to win anyway. So he's not going to do anything between now and November. But certainly he's not in a position to fight anyone else either. He's absolutely going to lose, and he's on the back foot anyway. So that's certainly the case, but why I bring that up is because crude oil for now as a commodity, it's really nice to not have gas prices out of control, and that was one of the areas where we were all potentially vulnerable with regards to Russia. We're not at the moment, and it's really nice from an everyday person perspective to see that crude oil is kind of doing what it's doing. And so also interesting, if we're going to see the markets range for a bit and crude oil's ranging for a bit, it's all due to the uncertainty that's coming out of the US. So I don't really see any good money-making opportunities on crude oil at this time. All right, and then let's run through the majors. So let's have a quick look at all the major currencies. So this is where it gets kind of tricky. We've got this downtrend on the weekly with euro dollar. All right, so we've got that happening. When we go to the daily, we still have what could potentially turn out to be a little bit of a bull flag, actually, is that we have price coming down, looking nice and bullish. We've got this nice little double bottom effectively with this nice strong move. We could see it attempt to move higher. So that is something to be aware of. So we've got the bigger, more bearish channel that price could head lower in, but we've also got the potential for it to move a little bit higher here. So what we have really, and I suspect there's a really good chance it's going to wait till Friday. It's going to basically, not saying it will definitely do that. I'm saying that in the past, non-farm payroll often, the markets always wait kind of until we get a big news day and then they decide what they're going to do. So this week, I would expect is going to be mixed. It's going to either do nothing or it's going to be quite volatile. And so just be prepared that the market is not just necessarily going to tick along the way that it has been the last few weeks. So we look at sterling. So I'm going to clean up these charts a bit. Sterling again appears to be sitting sort of close to the top of its range over here. It's been, if we go from a monthly perspective, you could see that it really hasn't done a lot over the last couple of months. If you just kind of grab it there, it's been kind of stuck in these areas. A failed breakout to the upside in 23, a failed breakout earlier in the year, and then it's kind of staying there. So it's really coming up and testing that. It's a higher low. Could it break out to the upside? I guess it could, but if we find that it starts to head down this week, then the range is still intact. So again, be cautious of that. Aussie dollar, US dollar, again, is very similar. It's range bound. When I say that, it's not a perfect range, but what you can see is for sure that it's ping-ponging between prices that it's been in, going all the way back to 2023, more than a year ago, to February 2023. So it hasn't really done a lot there. Kiwi dollar, US dollar, same kind of thing, still stuck within that range. Looks a little bit more bullish at the moment. So all of them looking a little bit as though there's that weaker US dollar. And that's why I say the US dollar could be the mover this week, something to be aware of. Dollar Swissy. Okay, so dollar Swissy for me is one of those pairs where I anticipate bullishness throughout a lot of the next few months, but also that doesn't mean that it won't have a retracement over a couple of weeks here and there. And so this is one of those areas where it's clearly right now in a consolidation period. And is that ahead of a bit of a correction to the downside before it resumes to the upside, or is it going to break out to the upside? So again, I'm going to have a look, and I would be cautious of that. Because it's range bound, I expect that there could potentially be a bullish candle forming this coming week. It's at the bottom of the range. I do think some of the Swissy pairs are looking nice and bullish, and and therefore I think that that is a possibility. I'm going to show you all the Swissy pairs very quickly to explain the thinking there. So I'll go to the weekly and let's go through. Let's have a look at Euro Swissy. Euro Swissy is a nice new uptrend. What has it done for the first time in ages? It's managed to, we've got bullish divergence over here. Really nice bullish divergence here. We've got very kind of sort of almost a double bottom in terms of how price reacts at those levels. It's broken up above that 50-period moving average. It's come back and retested it and is heading off, and it's now coming back again. So it is at a level, but what my point is that to me, Euro Swissy is now more bullish than bearish, and therefore this week I would expect it to potentially move a little bit higher. Pound Swissy will be the same analysis in essence. You can see that it's managed to break out of this range, breaking back, coming to potentially retest it for support. It has also had a very nice kind of a double bottom here on a larger scale thing, bullish divergence above the 50-period moving average. So here I'm saying there's a good potential for it to turn around. Let's look at Kiwi Swissy to compare that. Kiwi Swissy now definitely very much on the bullish side. There's a nice double bottom. You can see it's trending higher, bullish divergence, breaking above the 50-period moving average. All the Swissy pairs will do one more, Aussie Swissy as well. Same thing, very similar. This is a triple bottom off there, so strong rejection of that with full-on bullish divergence, breaking above the 50-period moving average. You've got the 50, 20, and 10 in a very nice bullish formation. So my expectation this week is that the Swissy pairs are in a good place for them to turn around and possibly head higher and finish with a nice bullish candle this week or next week, but I think this week is probably the one. So all the Swissy pairs looking very good from that perspective. Let's have a look at dollar CAD. So dollar CAD is a mess, of course, when you look at it over here. Range bound, not offering too much clarity. And even within the bigger picture, it's range bound. So it's a mess. So that it isn't, you know, when I do the analysis on the markets, it isn't just about where are the potential strong trends, where are the money-making opportunities. It's about which markets are a complete mess and which markets we should avoid and stay away from. So something to think about. Okay, so let's look at all the CAD pairs. Let's do some CAD analysis. So let's look at EuroCAD. EuroCAD to me trending higher, slowly. Look at that weekly possibility here that it might come back, find some support in these areas potentially and turn around, and that would help possibly if we get that. We might even get Euro strength there as well. Let's look at PoundCAD. PoundCAD, similar type of thing. Look at how it's broken out of resistance. So it's kind of breaking through there. We could see a continuation to the upside. Euro has been somewhat stronger lately, as has the pound. Individually, they've been stronger. Let's look at Aussie CAD. Aussie CAD still trending higher, also possibly having broken through resistance. Might want to see a continuation to the upside. So these charts are not as pretty as some of the Swissy charts, but it seems as though the CAD crosses and the Swissy crosses are leaning bullish. Okay, and certainly over this week or next week, they're looking to bottom out. So they might go down a little bit before they then turn around and then start heading higher. And then we've got Kiwi CAD as well. So Kiwi CAD hasn't broken through its major resistance level, but it certainly looks like it intends to do that. So something worth looking for or looking out for. Dollar yen. Okay, so dollar yen continuing to tick higher. So I'm using that language carefully, to tick higher, meaning that the prevailing trend is flowing to the upside. We know that the Bank of Japan ultimately would like to see it reverse. And we can kind of see roughly where the line in the sand is for them. So what it means for traders is, yes, trade it to the upside if you get your valid setups, if you get your wave rider signals or you get your price action signals and they look nice and bullish. But also at the same time, you've got to be prepared that the Bank of Japan might start to intervene and we might get more pushback on those levels or some possible intervention. And the only way around that is you either don't trade it or you trade it with less money. In other words, less than 1% risk, or you trade it with your 4% risk and you accept that there's a possibility that before you hit your target or before you can get to break even, they might intervene. So those are the ways to do it. Euro yen, definitely trading high. That trend is still intact. Again, this is not an incredibly rare situation. In the time since I started trading, I've seen the Bank of Japan and the Swiss National Bank intervene in currency pairs several times. So it's something that's going to happen in your trading career at some point. This just might be the first time you are seeing it here. It's not something that happens often. It might happen every 10 years, but it is something that happens on occasion. Keep in mind that the currency market, even though it was only kind of sort of created between banks and institutions in the 70s, in the early 70s, and really only became available to retail traders in 97, 96, 97, it's very new. So it's only 20 something years old, okay, almost 30 years old for us. And therefore, for these types of events to happen every 8 or 12 years, it hasn't happened a lot within the entire time currency markets have been around. So they're still relatively new from that perspective. And if you think they're new, you can imagine how new cryptos are just in comparison. Pound yen also continuing to tick higher. So also looking nice and bullish on those ones. For me, for the most part, I'm looking for buy opportunities on all the yen crosses that have nice strong trends. I am just cautious with regards to my risk and my stop loss. I might still go at full risk. I will just, that if there is an intervention, obviously as soon as I can, I'll try to get a break even or take some partial profits and just be aware, acknowledge that there is a possibility that the Bank of Japan could intervene. Kiwi yen, like a big run up here, pull back and looking keen to go on. So again, Kiwi yen, let's have a look at CAD yen. CAD yen continuing to push to the upside. Swissy yen also back up to the upside here. So this annoys the Bank of Japan because when they start talking about intervening and stuff, they're hoping to do it and they won't quit. But this could be something that drags on for a year. It could go for 3 months, it could go for 6 months, it could go for a year until they get that reversal. They will keep going. So just something to be aware of. Almost even more so is if you're taking 2 or 3, let's say you get wave rider setups and you're taking 2 or 3 of them. So now your exposure is maybe 3%, for example. Definitely you then want to be prepared for that. Let's just say that you are in a trade and there is an intervention and you end up having a big loss. You don't have to be mad about it. You don't have to be really depressed about it, especially if you've watched this and you've been warned. There are going to be plenty of professional traders that would have taken a calculated risk and gone, you know what, I think I can still get profits out of a trade before they intervene, because the next time they intervene might be 2-3 weeks from now, and by then I've already hit my target. So you wouldn't necessarily be the only people who do that. But you have choices. You can reduce your exposure, you can not trade it, you can take profits sooner. There's lots of different things you can do in your risk management. And if you decide to go, as the expression is, kind of balls to the wall on it and just do it, and you decide to do that, conceptually, that's fine. You're an adult, that's your approach. There will be other traders who will take that risk, but if it does end up coming back and biting you in the bum, so to speak, you just have to go, okay, lesson learned, or if I did it again, what would I do? Okay, so let's have a look. We've got Sing Yen as well. Also, they're flowing to the upside. They're continuing to do that. Anything else that I want to add to this? Anything else that jumps out? Aussie Sing still looking bullish. That's a nice double bottom, looking more bullish. CAD Swissy, range bound, but at the bottom of the range, producing a bullish candle. So this is probably just going to go back up to the top of the range. Euro GBP, very messy. Euro Kiwi, nice and bearish at this point in time, which means Euro Aussie is just a mess. Some of these are just very messy. They're not really worth engaging in potentially. I'm still cautious with Pound Aussie and Pound Kiwi. They have their trends, but just right now, I noticed the Kiwi pairs are heading lower. The Kiwi crosses are heading lower. And that is it. Here we go. That's your 20 minutes kind of market thing, looking at it, running through stuff. I think just be cautious this week. But as I said, the yen crosses appear to have some great trends. The Swissy pairs could have some good trends to the upside while they turn around. CAD pairs a little bit less so, and then the others get a bit choppy and then not really as good. And again, as I said, oil, very mixed kind of signals. Remember that we're trading what we actually see. So I'm not going to go long on oil now because it's a election year, because if I'm not seeing it. So if you're not seeing the market respond to what it should, based off seasonal stuff or based off statistics or historical data, if you're not seeing the price action support that, you don't do it. Okay, so the price action must support the data, the historical data. And that's it for me. So just, the dollar could be the big mover this week. Otherwise, trade it thinking slightly more short term, because this week is going to be an interesting one anyway. And that is it, ladies and gentlemen. I'm going to leave you with that. Remember to keep calm and trade, and keep carrying on trading and just trade sensibly.